Hello and welcome back to another installment of the video series I'm doing on this channel called Please Fix Thanks. The point of this series is to look at a single large loss. They're all going to be, I'm going to try to have them be very large relative to the traders' previous trading. It might not seem like a lot of money to some traders, but I just want to be documenting a very significant loss for a particular trader or institution. And through these losses, I want to develop an understanding or a lesson or essentially like allegory for the correct way to approach the market at that time. So the situation we're looking at today, or the loss we're going to look at today, is by Byers. I think is that how you pronounce his name? And so on January 20th, 2026, Jay was trading gold spot. And you can see that he's got a pretty large Forex account, Globex account with, it's nearly 2 million in equity there, and that could just be like one single account, and this trade could be being copied over multiple accounts with different brokers with different management privileges, all that, and so it's kind of early in the NYAM session, so it's one of these. I have the PowerPoint cropped, but the it's like right around like 8 a.m., 9 a.m. Eastern Standard Time, and he's trying to short gold. And so I've got the hourly chart here for gold that shows basically like the from the 14th to the 21st. So his trade, he's trying to go short up here. So it really kind of blows up on him very, very fast. And some of it is like the stubbornness. So what I want to do is I want to switch over to his video, let's watch the reaction to it. He's actually very stoic. Oops, you know what? Actually, I don't think I have that ready just yet for this. So tell you what. Let's go to FX replay and let me just break down where he got in, and let's look at some ways that we could be viewing the market that would, number one, allow us to avoid going short when he would, and number two, maybe even finding ways to go long before he went short, or even drilling down to the lower time frames and trying to find a way to go long basically right as he's going short. So rather than try to do this crazy mean reversion scalp, top tick the market type thing, we could be doing a continuation trade momentum on the long side, being bullish for gold. So yeah, let's go to FX replay, and right here I've actually got the daily chart of gold, and this is heading into late January of 2026. Excuse me there. And so you can see that gold's been in quite a vicious uptrend. Hasn't been going up every day, but just zooming out, a really historic uptrend, starting with the kind of the post-COVID supply chain constrained bout of inflation, and then just kicking off from there. And in hindsight, you could look at this first half of 2026, particularly like the first quarter of 2026, Q1, as a blow off top in gold, or as the kind of a final kiss of death, into these projected all-time highs. And that's going to be kind of like a theme that we're going to go back to over and over again in this video as we analyze this, because the idea is, because there's no levels of significance left here on the chart, we can't use our normal methodology. Even beginner traders know this about trading at all-time highs. So that's always a struggle for your system, is when you're doing these projections, how high is too high? When is enough enough? I'm just going to clear all these drawings because I've got some from other videos I've been doing on gold. So yeah, hold up 1 second. Okay. So anyways, let's go down to the hourly chart. I think the hourly chart is like the best. So he's hoping for a scalp. Like, he's really hoping to be in and out of the same highly leveraged trade in the same trading day, essentially, like as if you were prop firm trading. Though that is, I guess, I watched his video, I listened to his video and other videos of his, and I guess it's him and his partner and other people's funds, I'm not sure what kind of vehicle or what kind of type of filing they have for managing all these funds, but it's not entirely his funds that he was trading that day. So anyways, we have gold do some really serious consolidation, and then a CME gap up. There was a lot of speculation going on because the U.S. had made some activity in Venezuela, and also with Iran. So Iran, obviously, the Iran war didn't start until months later from this, but there were I was actually trading crude at the time, and I was actually scalping crude long already in January here, because I knew that crude was going to pop due to geopolitical things like Iran. So because remember, I don't know if you're not crude traders, but crude was at 55, gold was at all-time highs. So to me, the writing was on the wall to and this is like Jay, I would love to have shorted gold as well, though not here. And my way of approaching it was to be long crude rather than be short gold. But at the same time, let's go and look at what Jay did from a CRT perspective. So I'm actually gonna go to the exact moment of when I think he first got into his trade, which was right around 8 a.m. On that Tuesday there. So we'll probably blow past a long entry. So here's Asia going into London, and there's London. And now we're in mid-London, and gold's already just accelerating away from. So you had the CME gap, and the idea, a lot of traders love this, is to have a bearish turtle soup and then a filling the gap type thing. Though I think the traders that expect this gap to be filled right away, they're not usually trading turtle soup. It's a different type of trader usually. And then, oh, okay, I apologize. I kind of blew past where he got in. So you could see that it actually did look like there was some weakness feigned, right? A short-term market structure shift, or a lower time frame market structure shift. Not a true market structure shift, a false market structure shift. False. Lower time frame, false. I apologize. I'm typing with one hand. Market structure shift. Shift. Yeah. So this is what Jay was the victim of. Was he he essentially saw this rolling over. He was only on the 1 minute time frame. I noticed from his MT4 or 5 screenshot there. So, well, this is gonna bug me. There we go. Let's go to the 1 minute chart. Okay, it really is it really does look like a market structure shift on the 1 minute chart, I'll admit, because, you know, just the standard of like closing below the low that broke the high, you know, like what is the low that broke the high here? Get my brush. So like this is the swing low on the 1 minute chart. This is the current high, the current all-time high in gold. Okay. Have you ever heard the expression never trade the first pullback? Yeah. So it's funny when you do enough of this charting, like my next reflex was to draw a line here and to be like bullish turtle soup. And of course that's what happened. So I'm going to actually follow through with my reflex. It's like a knee jerk at this point. It's like you hit my knee with that hammer at the doctor's office, and I'm kicking right now, and I'm drawing that horizontal ray and or that horizontal segment, and I'm getting ready to look for ways to scalp in there and look for a model number 1 for an excuse to get long. Because you don't want to short the first pullback. You want to go with the trend, unless you've seen this, you know, really compelling evidence. It really has to hit you on the head, and I can show you an area a little further on it as price develops, many hundreds and hundreds of points higher in gold, where you would see it. But anyways, he actually gets short here, or we can give him credit and say that he got short here. Like, you know, yeah, like he was expecting maybe a little retest and then bang, go short. Yeah, we can give him that credit. And so his trade essentially looks like this, where, oops, I'm sorry, that was a long forecast. Again, a long. It's hard to make mistakes. There we go, short. Okay, so we're going to give him the benefit of the doubt. We're going to say that right at 8 a.m. on the hourly candle close. Here's the other thing about Jay is I actually don't even know his trading strategy. He didn't even mention it in the video, and I don't really want to bring it up. So, you know, maybe he's looking for, I mean, if gold's moving multiple percentage points a day at this point, you know, maybe he's looking for a 1% retracement on the trend. You know, like he might be looking for gold to hit that breaker there. It's pretty reasonable, honestly. If that were a true market structure shift, that'd be a pretty good first target. You know, this would be like a first target here to be like a first target. Like down here would be like a good place to watch gold for, you know, to get long again. So, but the weird thing about this trade is if that's his take profit, in the video, he just lets it go. He lets it go and go and go and go and go on the 1 minute chart. And he's sitting there. He's sitting on the 1 minute chart, and I'll play it out here on the 1 minute. And it's just actually, whoa! Look at that! Look at that little man. If he did get there, he almost could have mitigated right there. Though that makes me think that he was actually in lower, because it didn't look like on the video that he had any chance to get to mitigate. And I really don't know when he got out. I mean, for all I know, he would have been, maybe he was leveraged to the absolute nines, and he didn't take the advantage to get out there. Maybe that was the case. Oh, actually, you know what? Because I do remember from the video how he talks about, no, he's holding it way longer than this. He talks about 4829 as a mental stop loss. 4829. I apologize. I normally can just reconstruct these traders' trades, much quicker than this, but I'm kind of like remembering this in hindsight. Yeah, just a terrible risk reward on that trade. Like if he's expecting to get 1%, which is a pretty reasonable expectation. I mean, the realized, if you look at like the average true range, which is an indicator of realized volatility on gold at the time, I mean, it wasn't much more than, that maybe it was 1 1/3 percentages on the daily. But yeah, even with that allowance, it's still a terrible risk to reward on that trade. But yeah, it just brutalizes him. Like I think there's a moment in that video where he's he's on the phone with his partner, and it like ticks there, and he's just like panicking. He's got a lot of panic in his voice because he's looking at a $350,000 loss, and he's like, okay, like 29 is my stop loss. And the guy's like, you put in a stop loss for 29? He's like, yeah, I'm going to manually close the trade at 29. And then finally there he closes the trade. So this is a pretty painful, I'm thinking pretty mentally difficult trade to like get short there with that much leverage. Looking at other screenshots from the video, I remember seeing that it was like something like 60 lots on gold, which 60 lots is a lot for anything. And one gold lot is like some of the highest leverage you can get in the Globex world. And to have 60 of them, and then just to let the trade move 101 points on gold is just absolutely incredible. I mean, that's 10,000 pips. To use the Forex way of looking at it. 10,000 pip loss. Just brutal. Or I guess it would be a 1,000 pip loss. It's been a while since I've switched to Forex tradings. Sorry, I've switched to futures. So it's been a while since I've been able to hop around and do pips on things like the commodities. Okay. So let's look. I promised that we look at this from a turtle soup perspective, and let's go back to the hour, and we'll keep. I wanted to do a couple things, which was, is his actual entry a entry in contrary? Because that is often the case with these big losses. That's why the system works, is that the moment in which it causes an experienced retail trader to commit to a trade so hard that they lose a ton of money. I mean, he didn't really blow up his account here, but he lost a ton of money. That is the moment that the market makers have succeeded in this game that they're playing, in the the so-called liquidity engineering, volume engineering, positional engineering, all that behavioral finance stuff. So it actually looks to me like if there was an origination candle, you could call maybe this one. So in other words, like you have a clear distribution here, and then the distribution ends, and then it's this beginning of like, hey, we're probably going to start accumulating now because there's suddenly a down close candle, right? So let's do this. So we'll call that the origination candle. And that's actually a good stop loss because we only tap into internal liquidity here. And you know what? I'm gonna actually do a throwback to kind of a classic Romeo 2023 type thing where I actually think that the entry that we're looking for is the breaker or the wick on that 1 hour candle, and we're going to drill down on that. And then we're going to candle count right now just to make sure that this is a proper way to look at things. So if we are in the hourly time frame with this analysis, then we should go 1, 2, 3, 4, 5, 6, 7, 8. Perfect. So I always look for between 7 and 12 candles. And so this is our the duration of our accumulation and manipulation is 8 candles on the 1 hour. 8 H1 candles. And that means that we should expect at least 3 hours of the market distributing after that. And so it looks like we can count the 8th candle as both the manipulation and the beginning of the distribution, which it was. And yeah, it looks like we have, I mean, we literally clear this high in the first candle, or even the 0th candle, because you could even call this 1, 2, 3 as distribution. So let's do that, because this is like the manipulation candle. So we could call this 0th of the distribution, 1st, 2nd, and 3rd. So by the high of the 3rd, where did this reach? It's some projected high. And so this is like a dynamic that we're gonna use when we trade these turtle soup entries on clearly trending markets. Is on clearly trending markets, you have and those are markets that are trending on a much higher time frame than the one that you're trading on. And right now we're on the 1 hour. So on clearly trading markets, our target is a projection of the range. And I'll show you which projection fits that target. Our entry is internal to the range. It's not external. So in other words, all price has to do is tap some sort of internal liquidity within the range. And this range is defined as the low of the origination candle to the high of any single candle in the range. And so here's our range, and that's going to be useful later when we go to draw our projections. I'm going to delete our target for now, because we're not supposed to know it yet. It hasn't, like, if we're getting into the trade there, it hasn't happened yet. Yeah, and let's look at a projection. So let's just do, I'm just going to draw the fib. Oh, I apologize. I'm used to my on TradingView, I've got the ones coded in, like I've got negative 0.618, I've got -1, and -1 would project this. So to see where -1 would project, we can simply drag this to create the measured move and park it right on top. Yeah, so it looks like you know, you could say 50% or maybe even 0.168 further or in advance. There's actually a tool called Trend Fib Projection that you can use. Fib-based extension on TradingView. So it looks like our particular distribution, with this being 0, 1, 2, and 3, it actually got to the 618. So that's kind of cool. So like you could say at least 50. A 50% projection. Yeah, and the entry is internal. Though that being said, the entry is internal, but it must be in premium or discount. It must be in discount for bullish, premium for bearish. You guys get it, right? So it must be distal, or you guys get it. I don't have to say that, but that's just an added little detail that you guys already know, because you guys are already Romeo traders if you're even consuming this content at all. So yeah, so we've reversed engineered his loss into a win we've fixed his trade. I want to say, if you are looking to counter trend short, I want to show you it wasn't actually there that was the moment. So in other words, it's not like he got out and then all of a sudden there was this huge win, because I'm pretty sure we had another little trade higher and then it dumped, but it did end up retesting some of this internal liquidity here. I don't think it ever filled the CME until much later, like during gold's crash earlier this year. Spoiler warning if you haven't seen a recent gold chart, but gold's actually trading below here where we were in January. Currently, gold is right around 4,000 now. 4,000 even. But yeah, actually, you know what? Can we do this before we get distracted? Let's do this. Actually, I'm sorry. I'm pivoting from the pivot. I want to look at the lower time frame because we're on the 1 hour time frame. Let's go to the 5-minute chart for a signal. Yeah, this looks like gold on the lower time frame. It's very like lots of wicks. So there it is. There's our market structure shift. I'm just gonna remove that risk reward. There it is. Okay. So do we get a model number 1 in gold? Yeah, we actually do. So there's our low. Our very significant low, our key level, kind of on, within this, on the lower time frame here. And so here's the high that broke the low. We close above the high that broke the low. We actually get a retest here later on in the session after the 10 a.m. Euro markets expiry. We get that nice boom, and then that's smooth after that, just to get higher. You can catch a pop. Yeah, like we could do it like I've heard if you could go crazier and get down to the 1 minute here, why not run FX replay? Yeah, and there's a textbook 1 minute model number 1 here, really great 1 minute model number 1 with a breaker entry there. We could look. I forgot to look back at the 5 minute here to look at a breaker entry on the 5. Yeah, and so that is essentially the breaker as well, and we probably get another breaker entry off of that as well. That, if you can count that as a breaker, we don't get a low. We get a low and then we get a higher low. So there's no like can we call this one and any kind of price action off of this one a breaker? Not really, because it's we just never got like the correct zig and zag in the market to do that. But yeah, really intense trade. I'm gonna go to Brave really quick. I just want to sum up the video with just listen to his monologue. Let me just poke some settings and just to make sure I can get to the correct source here for you. Apologize for the blank screen. I just have to get the correct. This is the one. Yeah, I usually set this up ahead of time much better. But let's just listen to him really quick.
Down about 350,000 today. So I'm gonna do this entry, kind of talk about what happened, because it's fresh in my mind. This literally just happened not too long ago. So number one, how did this happen? To be honest, I did not listen to my edge or my playbook at all. I completely deviated from it. And the sad part is, I knew it was going to happen. I saw that I was coming off a really hot year. I was really confident. And then I started trading things that were kind of my strategy, but not really, like entering before certain signals were being placed. And then I took a completely intuitive.
Yeah. So yeah, it's a good lesson to be learned, and it's good to. It's just good. It's just healthy to just immerse yourself in big losses and the stories of big losses and the how to handle it well, how to handle it bad, what could lead to it, every aspect of it. Study the losses. It's very healthy as a trader. It really grounds you. I plan on making a video like this at least every week. There's nothing like keeping a win streak intact by staying aware. He had made, just to give this more context, he had made this trade after making a literal $1 million in one trading year, which was an amazing achievement. And he was on a win streak, and he'd already made more than 300. No, he had just under 350K. He had made like 310 or 330 or something like that already in January. So it's like he had made $1 million in 2025, and then already in January, in the first 15 trading days of the year, 12 trading days of the year, he had already made almost a third of $1 million. So he was compounding.